Do it.
All right, guys. Alexis Hughes here, eXp Realty out of Charlotte, North Carolina. If you are joining us today, we are just going to talk all things lending, basically. We've got the amazing Reid McKee with Movement Mortgage here that I have personally been able to work with on several deals. Just blown away by his go-getter style, his attitude, responsiveness, everything. And I thought to myself, I was like, buyers, sellers, agents, everybody needs to know who Reid is. And let's find out all about buying a home, selling a home, how he can help you as an agent. So Reid, you want to introduce yourself?
Sure. Yeah, absolutely. So my name is Reid McKee. I am with Movement Mortgage out of Charlotte, North Carolina. Little bit of background, quick story. I was actually a real estate agent before I became a lender. My mom has been in real estate for as long as I could remember. So I kind of grew up in the business, saw her work ethic and what it took to be successful. Long story short, I had my mentor at the time basically say, hey, come to the lending side. I like your work ethic. I think you're bringing some youth to the industry. Try it out. If you don't like it, you can go back to being a real estate agent. So switched to the lending side and I haven't looked back. It's been 4 years now, I believe.
4, yeah. Me and you are like right on target. So I've been licensed 4 years and you've been doing lending for 4. So
Yep.
I wanted to dive in and just ask you a couple of questions. Guys, if you're on this call or watching this call and you don't know, Reid is like TikTok master. And so I do want to talk about that for a minute because honestly, how Reid and I met and very first deal was from a TikTok video that he did that I shared. So go follow him at the Mortgage Dude on TikTok and Instagram and everything. But one of my clients saw his TikTok and it was so funny, and I'd shared it on Facebook of all places. And she reached out simply because she liked that. And she had no idea that I could actually get Reid to be her lender. So I felt pretty cool. I was like, yay. So Reid, tell me a little bit about what inspired you to start doing your TikToks, how that's helped your business, your customers. What did they think of it? For some of the agents that are kind of like me being one of them, I'm a little standoffish with it. So tell us a little bit about that.
Yeah, so on social media is 100% my bread and butter. Growing up, I've always made funny videos. That's just my personality. For as long as I can remember, I get with my friends, we'd make the craziest videos and just post them. And they've always been a hit. So when I came into the real estate industry, or specifically the lending side, as I mentioned before, it's more of an old school, traditional type of industry. So I got in with no contacts. Obviously, like I said, I was a real estate agent, but didn't know how I was going to do anything. So I basically just started making videos, showcasing my personality. It just took off like a rocket. I mean, that, like I said, that it's been my bread and butter. It starts conversations. I won't lie. If you watch some of my videos, there's been some people that says, if someone watches that, do they really want to work with you? Do you take it seriously? I get that sometimes, but for the majority, I would say 98%, it's a way to get your foot in the door. So what I've been doing, like I said, I typically do funny videos. Again, that's my personality. So I've been trying to switch it up a little bit and combine the funny, the comedy with a little bit of, just being informative is my goal. And I want someone to watch my videos and say that they learned something is the ultimate goal. So ever since I started doing that, my business explodes. I have real estate agents reach out to me from all over the place. Clients reach out, they ask me questions. And again, it's just a way to get your foot in the door. Because if people don't know who you are and what you do, you're missing opportunities right there. And one of my biggest pet peeves is, seeing a friend on Facebook that they just bought a house and they didn't use you because they forgot you're a real estate agent, forgot you're a lender. And this way, I can use my personality and just because at the end of the day, I think we take for granted how much we know and how little the consumer knows. So simple things like you don't need 20% down. I just hosted a first-time homebuyer seminar. And my first question was, what do you think the minimum down payment is to buy a house? And the majority of people shouted out 20%. So point being, you can use the little things that, we do on a daily basis, that we see on a daily basis, and put that in content and just put it out there in the world. And I promise you, it's going to generate a lot of conversations to help your business.
Wonderful. Well, speaking of 20% down payments, I've had several clients that are dead set. I'm going to put this amount of money down no matter what, even though they don't need to. With the way the market is right now, and obviously needing as much cash on hand as possible for multiple offers, are you suggesting if clients don't have to put 20% down for them to do it anyway? How are you having that conversation with clients that just are stuck on that 20% number to get them to make a better decision financially?
Yeah, so typically the reason why they're stuck on that is because they want to avoid PMI. I always say PMI is not, I mean, it doesn't necessarily go towards anything, but it's not a bad guy. It helps you get into the house, and there are ways to get around it. And basically what I do is I'll break down the numbers. So if you put 5% down, 10% down, and you have, this much cash left in your pocket, whatever the case is, I'm a very visual person myself. So like I said, I like to take the numbers, show them, what you could be saving, or if you need that extra money to put $5, $10, $15,000 towards a higher offer to compete in this market, that's something that you're able to do. And then the mortgage insurance isn't as much as someone might think it is.
Right.
So I just break down the numbers.
Correct me if I'm wrong, because I know when I first started in real estate, I didn't know this as an agent. And, I'm sure a lot of consumers don't realize it either. If you're in the home, say you do have that PMI initially, but you're in the home and the home is appreciating. Could you not, once you've got 20% equity in the home, as the market increases its value, get rid of the PMI after that?
Yeah. So basically, if you're not doing a refinance, you can always call your mortgage servicer and say, hey, I believe my value is here. You will have to pay for an appraisal, which is about $500. But if you're saving 100, 200, whatever the case is, I mean, that's going to pay off very, very quickly. So yes, all you have to do is call the servicer.
Guys, call your loan company, the servicer, today, and make sure that you're asking them. If you guys want to know what your value is, reach out to a local real estate agent and ask for a market analysis. That's going to give you a really good idea of whether you have that 20% equity. Now, Reid, correct me if I'm wrong, it would be the loan amount versus the actual value of the home. And so as long as they've got more than 20%, they should be able to have that PMI removed.
Correct. Exactly. And one thing, especially right now in this market, because, as we all know, the homes are going for 10, 20, 30, $40,000 above asking price. So what I'm seeing now is I'm having less and less problems with appraisals. And reason for that is because those homes that sold for over asking price, those are the new comps in the area, meaning those values are up. If you're not planning on moving, that means your house value is going up. Right. So if you have PMI and a conventional loan, I do want to mention that FHA mortgage insurance is on for the life of the loan. So if you're in a conventional loan, you're not planning on selling, but you do have PMI, I would highly recommend running an analysis to see where your value is, and you could very well easily get rid of PMI.
Now, for our homeowners out there that maybe have FHA or VA or USDA, tell me, just broad, obviously, at times you would recommend it would be great for them to refinance to get that PMI off.
Yeah, that's a great point. So for VA, USDA, you don't, or VA specifically, you don't have any mortgage insurance, monthly mortgage insurance. USDA, there's a small annual fee that's broken down monthly. It's typically very, very minimal. For FHA specifically, it depends. Honestly, it's a case-by-case basis. What I always say is refinancing either makes sense or it does not make sense. There is no gray area. One of the most common things I get all the time is I want to go down an entire point before I refinance. Which, I mean, that might, obviously, depending on where you are, that might not happen. So I always, again, I'm a visual person. So anytime I'm working with someone, I try to just break down the numbers, show them so they can see it in front of them. And again, all I'm looking for is your break-even point, because refinancing does cost money.
Yep.
So I take the cost of refinancing, which by the way can be rolled into your loan amount. And then just divide that by the monthly savings. From there, we'll get that break even point. And, again, case by case, how long you're going to stay in the house. There's a lot of other factors that come into play.
I think what I advise people just from a real estate agent perspective, if they call me and say, hey, we're thinking about refinancing. I've had some of my friends ask that. And basically what I tell them is, hey, if you're not going to pull cash out, for one, you've been in the home for, I would say, at least 3 years. And your interest rate when you purchased was anything 3.75 or above, it's a good idea to explore it. Might not work, but I think it's a good idea.
Exactly. Exactly. And to be honest with you, I had a personal friend of mine. He bought a house a year ago, and this was a few months back. So I did ran his numbers. He was saving like $400 just from a year. We never have to run credit up front, or at least I don't. I always, like I said, I just break down the numbers. I collect the mortgage statement, and again, just look for your break-even point.
Perfect. Okay, so with that being said, I want to talk a little bit and just kind of pick your brain just from a lender perspective. So guys, most people don't realize this. A lender is like the very first point of contact that you should have when you're thinking about buying a home. A lot of people make the mistake of going and looking with like Zillow and clicking and connecting with a real estate agent. Obviously I'm a realtor. That's great when y'all do that. But if we're speaking in terms of lending and things like that, really reaching out to a lender is your first step. And for so many reasons. One, having your pre-approval, knowing what you can buy. That's number one. But number two, these lenders like Reid, they work with real estate agents all day long. They're not just working with one or two, they're working with multiple ones. And a lot of times they're working with agents on both sides of the deal. So one deal, they could be interacting with two different agents. And so Reid, tell me, if you had to tell a buyer that came to you that was not represented by an agent, the top 3 things that they should be looking for in an agent and asking an agent before hiring them.
I would say that's a great question. So I would say, someone that's experienced and knowledgeable in the area. Because in Charlotte, for example, street by street, the values change, the neighborhoods kind of change. So you want someone that knows the neighborhoods and knows what they're talking about in the area. I would say someone that's available, answers their phone, text messages, call, whatever the case is. Being available is so important, I think, and that's one of the ways that I exploited my business as well. I make myself available because, as I mentioned, growing up, I always saw my mom she never missed a phone call. I promise you that. So someone that's going to be available and answer your questions, because we do this every single day. So we know the ins and outs of it. We know how to work it. A lot of times home buyers, first-time home buyers, and then if you're a repeat buyer, unless you're an investor, you don't do this very often. So you want someone that's going to answer all your questions, and again, it goes back to being knowledgeable. The third one, that's a good one. That's a tough one.
The hard questions, right?
Yeah, no, it's all good. It's all good.
Out so I can take notes and be like, that's Y, Z.
Yeah, so knowledgeable about the areas, always available, in my opinion. And then, third one's tough.
Okay, so I'm going to give you a question for the third one. How about that? My question for you, if you had a client that was choosing between 2 agents, one was a brand new agent, super, super smart, super go-getter. They are knowledgeable, because regardless, we can look up the market stats and see the numbers and everything like that. They've got a good support system. Or an agent that maybe has been in the business for 15 years. Would you suggest to that buyer to automatically disqualify the young, inexperienced agent over the 15-year veteran? Or would you say, Mr. and Mrs. Buyer, you need to interview them equally, because no matter how much or how long they've been in the business, they both know the same stuff for the most part?
Yep. That's a great question too. So I would say I would definitely not discount the new agent. Just speaking on when I started in the business, I was hungry to learn, and if I didn't know the answer, I would find it. So I definitely don't ever discount a brand new agent, and I mean, interview both, and you'll get an idea of the type of person that the new agent is. So if you're getting the vibes that, hey, Mrs. Seller, Mr. Buyer, I don't know the answer to that, but I'll find out and I'll call you back in 10 minutes. I mean, you'll get that vibe for sure. So I definitely say interview both, and just see the vibes.
Right. Okay, so Reid, we have been hearing so much on the agent side, and I think this is going to be beneficial to agents and buyers as well, about student loans recently. And many first-time home buyers are renting, their rents are rising every single year. We're expecting that to get worse and it to go up. But many of these first-time home buyers don't think they can purchase a home because of their student loans. What would you say to those particular home buyers or agents that are telling these home buyers they can't buy because of the home loan?
Yep.
I'm sorry.
Oh no, it's okay. Yeah. So that's also great. You have some great questions. I'll tell you that right now. Yeah, I always, I mean, for anyone really, not even just student loans, I say get with if you're interested in buying a house, get with the lender. It's not good enough to, go on a certain lender's website and just type in your information and they give you saying you can qualify for X amount of dollars, or going on Zillow calculator or whatever the case is. That's not good enough to know exactly what you qualify for. So my advice is, I mean, just get with the lender. Fill out the application. It's going to answer every single question that you have. As far as student loans go, I mean, most of my clients that I deal with, they have student loans. There are ways to, reduce, because we go off the monthly debt. We don't go off the total balance. And that's, I think, something important as well, because a lot of people think that we go off of, hey, I have $70,000 worth of student debt. There's no way I can buy a house. Again, it's case by case on what we can do. But actually, FHA just came out and they reduced their 1% fee that we have to charge a borrower to 0.5%.
Yes.
So that's huge right there. I mean, that's big time.
And so we can let everybody know, if you're a first-time home buyer out there, guys, FHA is a 3.5% down payment. So we were talking in the beginning about not needing 20% down. It's a 3.5% down payment. So if it's something you've even thought about, definitely reach out to Reid McKee with Movement Mortgage. Let him see what he can have happen for you. A big thing that we're seeing right now because of the shortage in homes is those that are moving into their second or third home. There's not much available out there, even though it's the prime time for them to sell. And so we're hearing a lot of questions right now about building. And so when I have a client come to me, they are under the impression that you can use a regular old loan to build. Can you tell us a little bit about what the process looks like if you're going to be building from the ground up, a custom home, not a home from, a national builder that's already in spec stage, but from the ground up? How does that differ from a traditional loan?
Yeah, absolutely. So I'll tell you right now, the company that I'm with, we cannot do, it's going to be a construction loan. So construction loans are a different type of animal. I do have someone that I refer them out to, and I am familiar with them from my last company, but they're a little bit more risky. So they come with stricter guidelines. So typically you're going to have a higher credit score. I don't think I've seen anything under a 700 credit score. And then it comes with a much bigger down payment. So I would venture to say 10% is probably going to be on the lower end that you'd be able to do. But I mean, if you're doing a construction loan, like I said, it does differ from your traditional loans, and it's going to be more strict on how you qualify.
And you as a lender, we like to stay in our lanes and only help clients where we can help them. You as a lender, would you not recommend you need someone that this is what they do? Construction loans are the bulk of their business, that they know the ins and outs, everything. Or would you just say, hey, run to your credit union and see if they can do one for you?
Yeah, no, yeah. So I created a relationship with someone that does specifically construction loans. So I think that's very important, because there's a lot of moving pieces when it comes to building a house. And someone that works with that day in, day out, they're going to know all the ins and outs of that particular program, how to navigate it, which is so important. And it goes back to being knowledgeable. So you definitely want someone that's what they do, because again, it's not as easy as a traditional loan. You want someone that's in it day in, day out.
And so a lot of what I'm seeing too nowadays is we have potential home buyers out there that may have experienced a bankruptcy in their past. Can you explain in your understanding for the loan packages that you offer, kind of what timelines they need to be looking at to when they're going to be able to purchase? When can a lender approve them if they have a bankruptcy? Maybe it's been discharged already or is coming up on being discharged. When can they start looking? Because I know a lot of potential clients I have said, oh no, I can't buy a home for 10 years. I won't qualify.
Right. Yeah. So it depends on which type of program you're going with. So VA USDA is 1 year. And again, it just depends. And the particular program that you go with is going to depend on your situation. It's case by case, of course. So VA USDA is 1 year. FHA for a bankruptcy, I believe, is 3 years. And then conventional goes to 5 years.
Right.
So again, it's case by case, depends on which loan you go with, and then we'll advise you from there.
Perfect. So it is possible. So guys, you're not having to wait those 7 to 10 years necessarily if you've had a bankruptcy and it's been discharged. Next question. You deal with so many offers and contracts all the time. Are you seeing right now agents getting FHA, VA, USDA offers accepted, and this multiple offer situation? A lot of buyers I'm hearing are discouraged because they can't go conventional. But it seems like these types of loans get beat out on multiple offers all the time. Are you seeing agents win with these types of loans?
Yeah, absolutely. I mean, I think because I do a lot of FHA and VA specifically. So I think it goes back to, getting a great real estate agent like yourself, a great lender partner, and just kind of putting a game plan together, and getting creative with the offer, and that's where I come in and just make sure that you are a solid buyer. We will close on this loan, and just making sure we relay that to the listing agent as well. So at the end of the day, I think it comes down to, like I said, just being creative with the offer. And I personally don't think that it matters which program you go with, as long as we know the lender does his job, has all your documents, they know you're going to close, and they're confident in that and can message that to the listing agent.
So one of the things we hear about is, hey, it takes 45 to 60 days to close on a loan. I know every lender is different, but Reid, can you tell me a little bit about how quickly you guys can close? Because in this market, being able to do that is really important.
Oh yeah, absolutely. So it depends on, again, it goes back to programs, but for the most part, we can close very quickly. Your standard closing, I would say, is 25 to 30 days. If we need to do it quicker, we absolutely can do that. And it goes back to the lender getting all your documents, having all your ducks in a row. That's why you should get pre-approved upfront in advance. So and if you want a quick closing, especially in this market, which I do recommend, just making sure you have all your documents so we can, once you have the house under contract, we can roll through the process. So, I mean, in all reality, I mean, we don't want to do this for every single loan out there, but I mean, we can close within 14 days. What I always tell any of my borrowers is, it hinges on you 100%. As quickly as you can get me documents throughout the process. So if a processor needs a document, an underwriter, if you're confident that you can get me your documents in a timely manner, then we can close very, very quickly. But yeah, it just depends on the borrower.
Let's talk about what you were talking about with the types of borrowers that come in and what questions they have and all of that. So one thing that we see is a lot of people are independent contractors, so they're 1099 employees. Can you tell us, just, and it's very broad, but as a 1099 employee, what are the top 2 things that they need to be aware of if they're thinking about buying a home?
Yep. So the biggest one I can tell you right now is and I know that this, I was just talking with a lady about this the other day, and it sucks to say, but just watch what you write off. because with any other type of income, we go off of gross income. With self-employed, 1099, any type of income like that, we're going off the net income. Let's say you make $50,000 a year and you write off $40,000 worth of stuff. We only have $10,000 worth of income to work with. So if you're thinking about buying a house, just watch. I mean, that's my number one tip. Just watch what you write off.
Awesome.
Second tip for a 1099.
Actually,
I mean,
file your taxes.
yeah, you have to. Yeah, definitely. I mean, because we go off your tax returns,
Yeah.
100%. So make sure you're filing. Just make sure you're organized with your business, because especially once COVID hit, lenders tightened up their guidelines, specifically for that type of variable income. So just be organized, have receipts, tax returns 100%, because that's how we document your income. So just be organized with how you're going about your income.
Perfect. Reid, if you had a potential home buyer whose score was below 640, would you tell them to not even think about buying a house, or would you tell them to let's see if we can work on it? How often do you see that?
I see it very often. So 620 is typically the threshold where you're going FHA, especially even if you're at a 640. So 620 is and you're not really getting hit on the rate that much. You still have a pretty low interest rate. What I always say is if you're below a 620, because we can go down to a 580. Unless you absolutely need to get into a house, I do not recommend going with that 580 to 619 credit score FHA loan, because you're going to get hit with fees. You're going to get hit with a massive interest rate. So what I personally do is I'll take a look at the credit. And by the way, I'm not a credit expert, so I don't get in trouble.
Disclaimer.
Disclaimer. So what I personally do is take a look at the credit, see right off the bat. My biggest thing is look at revolving accounts and see what we can pay down or off. That's typically the quickest way you can boost your credit score. If there's nothing that I'm seeing and there's a bunch of collection accounts, I always refer them out to a credit expert, because it goes back to staying in your lane. But I definitely try to set them up with a game plan, and that's what it comes down to. The application, talking with the lender. I personally don't say, oh no, you can't qualify right now, talk to you later. Right. I always set up a game plan and follow up with them in the future.
Perfect. Next question that I have, and then I think we can take some questions because we've got a couple in the chat box and everything like that. So with our market the way it is right now, in your perspective, is it better to rent or to buy?
Always better to buy.
All right,
always better to buy.
Tell me why.
The appreciation is going up so much. I mean, it's absolutely insane, the values that are going into people's houses. I personally don't think the market's going to crash. And I think a lot of people thought that or think that because of all the forbearances. But really what's happening with the forbearances is all those missed payments, they're just going on the back of the loan. I think what a lot of people thought is once they're done with the forbearances, they had to pay that chunk of money up front. And that's not the case. So I mean, all the data shows that the house values are going to continue to rise. It doesn't show signs of slowing down or going down. So I always tell my clients, having a house is like a piggy bank. You're where you're renting is not going towards anything. When you own a house, you're putting money into your piggy bank until later on down the road, when you decide to sell, you have this massive equity and fund, essentially.
I tell my clients, I'm like, you're paying a mortgage, it's just not your own, number one.
Right.
And
Yep.
number two, as my little spiel about this before we take questions is, as the houses continue to rise in price, we've got investors snapping these up. So these landlords and property management companies, their fees are going to increase along with the house's value, exactly, which means higher rents. So you could either be investing in yourself or you could be investing in your landlord. So right. I'm actually glad you brought up some of the forbearances and stuff. So we've got a question that says, with COVID furloughs, is it possible for a person on furlough to get a mortgage loan, great credit, and a substantial cash available to do down payments and reserves?
They have, you said they're furloughed?
They're currently on furlough.
Gotcha. Yeah. So we need to use that income. There unfortunately there's no way, because basically what we're seeing is that we can't verify employment, because the one question that we ask the employers on the back end, we reach out to any borrower's employer and say, hey, Mr. Jones works here. Is it likely that it's going to continue for the next 3 years? So if they don't work there, or they're on pause, or whatever the case is, and they can't really tell us if it's likely to continue or they're likely to come back, then it's just income that we're not able to use right that second.
Perfect. With that being said, if someone starts a new job, for instance, how long do you typically want to see them in that job position before you can approve them for a loan?
Yeah, so it depends. We want one paycheck. That's what we're looking for. As long as they're getting paid the same exact way, there's no other variables, like they're going from salary to commission. That's obviously a little different. But we want to see one paycheck, just to document it.
Okay, perfect. With that being said, guys, I'm going to open up the chat box and you can open up your microphones. Does anyone on our call today have any questions for Reid that he can answer for you? See? I always love this part because I'm like, if it's silent, did we do our job? So
I have another question.
Oh, go ahead, Dawn.
I'm just trying to understand, and I don't know if you work with these particular types of loans, but 203K renovation style loans. Was just trying to understand. I was talking with a client about potentially considering that as an option to be able to get into a home. And then the question of when would the mortgage become due? Would it become due at closing, or does it become due when they're able to move in? Because there's the question of the two carrying cost of maintaining their rental and now paying their new mortgage.
Yeah, that's actually a very great question. So I came from a company that we sent all our 203K loans to a specific area in the company that did those. So if I'm being completely honest, I'm not very familiar with those types of loans, but I can definitely find out that information, because we do offer them at Movement, which is a company I just moved to.
I will say this, Dawn, just because I have done 203K loans for my clients. Your mortgage is going to be due when it's due, because on closing day, you're closing on the full loan, the contractors get paid, so on and so forth. So they're going to need to be prepared to carry both costs.
Okay, thank you.
No problem. It's all right. I love 203K loans. For anybody that doesn't know what they are, Reid, you want to tell us what they are real quick?
So it's basically a renovation loan. So if you have a house that you want to fix up, or it might not meet the guidelines for Fannie Mae, Freddie Mac, FHA, it's just basically a way to put your costs into the loans and fix up the house to make it livable.
There you go, guys. So if we're seeing some ugly ducklings, or maybe these houses aren't exactly what you want, 203K loans are a possibility. Again, you've got to get with the lender to see if you qualify, what it looks like for you. I will say, when I've done them, you've got to make sure that what you're doing to the house is actually building value. So you can't take out $10,000 to repaint the house, because that's not going to add value. But taking, $20,000 out to add an addition on or something like that will definitely add value for that.
Right.
Awesome. Does anyone else have any questions for Reid? Any interesting little scenarios that you're coming across, anything like that we can talk about?
Lindsay, do you have any questions?
Hey, Lindsay. We've got two Lindsays here. We're calling out Lindsay Lambert specifically.
Lindsay Lambert.
All right. Well, if nobody has any questions, guys, I'm going to let Reid hop off of here. He's in Pennsylvania for a wedding. So thank you so much for taking time away from your family and friends to do this call with us. And guys, follow Reid. It's at The Mortgage Dude on Instagram, TikTok, Facebook. He is amazing. I will post this to YouTube if you ever need to look back on it, if you want to send it to any of your potential buyers or anything like that. And his links will be in there. So you literally just click on it, tell your clients to click on it, and it goes right into his system. Reid, thank you again so much. And I hope you guys have a great day. Okay.
Thank you for having me.
Bye.